Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Xlx Fertiliser Ltd. Annual Report. China Xlx Fertiliser Ltd. offers a diverse range of businesses and services across various sectors. At its core, the company specializes in the development, manufacture, and sale of urea fertilizers, both domestically and internationally. In addition to this primary focus, the company provides a multitude of other products and services. These include compound fertilizers, methanol, liquid ammonia, dimethylformamide, melamine, furfuryl alcohol, furaldehyde, humic acid, vehicles urea solutions, and medical intermediates. The company also engages in coal mining and sales, as well as the distribution and sale of electricity. Furthermore, China Xlx Fertiliser Ltd. is involved in various other industries such as gas production and trading, chemical production, intelligent equipment manufacturing, and head and beauty products. Additionally, the company provides services like agricultural production, technological development, consulting, international business and trading, engineering design construction, human resources provision, anti-corrosion services, and transportation services. Overall, China Xlx Fertiliser Ltd.'s extensive portfolio of businesses and services reflects its commitment to diversification and expansion across multiple sectors. China Xlx Fertiliser Ltd. maintains a market capitalization of $13 billion, broadly in line with the industry peer group. China Xlx Fertiliser Ltd. trades at a lower price-to-earnings ratio of 8 times and a higher price-to-book ratio of 1.19 times relative within the industry. Despite the industry trading at relatively low valuations, the stock matrix does not show much. Investors should evaluate if the business has potential earnings that is sustainable and if the assets are valuated rationally. The leverage on the balance sheet appears elevated, with liabilities of 61% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 2.56%. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth or decline in the company's financial performance can be identified through a thorough analysis of the extracted summary. Revenue growth is primarily driven by the increase in sales volume and trading volume of key products, such as methanol, liquid ammonia, and melamine. The expansion into new markets, including the EU market for melamine, has also contributed to revenue growth. Additionally, the company's efforts to improve operational efficiency, enhance downstream demand, and develop differentiated product models have led to increased sales volumes. Furthermore, the company's ability to capitalize on favorable market conditions, such as low anti-dumping duty rates and relaxed policies, has enabled it to increase export volumes and revenue. The expansion of high-standard farmland and peak agricultural demand season have also supported fertilizer prices, contributing to revenue growth. On the other hand, revenue decline is primarily attributed to falling prices, which have affected various product segments including compound fertilizers, DMF, liquid ammonia, polyformaldehyde, and other products. The disposal of equity in Tianxin coal mine investment has also resulted in a significant decrease in revenue. Overall, the company's revenue growth or decline is largely influenced by market conditions, operational efficiency, and strategic decisions made by the management team. Net income and profit margins underwent significant changes in the given period. Initially, net income increased by 1% year-over-year, YoY, on page 22, with a notable jump of $3.8 billion from zero to $3.8 billion on page 23. However, this growth was not uniform across all segments. In certain segments, such as urea and compound fertilizer, net income decreased by 4% and 3%, respectively, on page 33. Conversely, other segments like methanol, melamine, and DMF experienced increases in net income. The stability of net income for the methanol segment was a notable exception. Profit margins also underwent changes, with some segments experiencing expansion while others contracted. On page 22, profit margins expanded due to production cost reduction, energy consumption below industry average, financial expense reduction, and an increase in other income. However, on page 23, certain product categories like fertilizer products, -5%, and chemical products, -9%, saw a decline in profit margins. The gas segment's profit margin increased to 23% on page 25, while the medical intermediates segment experienced an 8 percentage point increase. Conversely, urea and compound fertilizer segments witnessed a decrease in profit margins on page 33. The melamine segment benefited from cost reduction, leading to an increase in profit margins. The stability of gross profit margin for methanol was a notable exception, while the liquid ammonia segment experienced a decline due to a drop in average selling price. The DMF segment saw a significant increase in profit margins due to reduced raw coal procurement prices and improved production efficiency. The company's debt level has undergone significant changes in recent years. Initially, total interest-bearing bank and other borrowings decreased from RMB 5,267,226 to RMB 3,301,196. However, this trend was short-lived as the debt level began to rise again. The interest-bearing bank borrowings increased by a substantial amount of RMB 3,701,387, taking it from RMB 12,695,298 to RMB 16,396,685. Furthermore, total interest-bearing bank and other borrowings also saw an increase, rising from RMB 12,855,312 to RMB 16,396,685. These changes indicate a significant shift in the company's debt level over time. The company's performance across various segments and regions has been notable. In terms of standout performers, the fertilizer products segment has shown significant growth. Additionally, chemical products have also seen a substantial increase in revenue, with a 21% year-over-year (YoY) rise in segment revenue. These positive results indicate that certain areas of the company's operations are thriving. However, it is worth noting that there were no segments or regions mentioned as underperforming. Overall, these findings suggest a strong performance across key business areas. Management is optimistic about the company's outlook for 2026. They anticipate a stable domestic urea market with ample supply and steady demand, as well as export regulation. This stability in the market will likely lead to stable fertilizer prices, which may even experience a steady upward trend in the first half of the year. The company plans to capitalize on this favorable market by leveraging its extensive sales network and economies of scale to meet growing fertilizer needs. Additionally, they are investing in research and development (R&D) efforts focused on precision fertilization and efficient application methods. This will enable them to optimize production while reducing costs. In terms of operations, the company's project construction is progressing smoothly, with a notable example being the Phase I Chemical New Materials project at their Xinxiang base. This project is expected to reduce production costs by 8% once it reaches full operation. To support these efforts and maintain financial flexibility, management will balance funding continuity with adaptability through bank overdrafts and loans. The company's capital structure will be closely monitored to ensure optimal support for business growth while maximizing shareholder value. If necessary, they may raise new debt or issue additional shares to adjust their capital ratios accordingly. Overall, management is confident in the company's ability to navigate the market and achieve its goals in 2026. The company's financial activities have been documented in various sections of its reports. One notable aspect is the payment of dividends, which has been confirmed on page 14. This indicates that the company has distributed a portion of its profits to its shareholders. However, there is no information available regarding share buybacks. The absence of any mention of this activity suggests that it may not be a part of the company's current financial strategy or operations. That concludes the financial summary for China Xlx Fertiliser Ltd. Feel free to comment below, and I will be happy to answer them when possible.